Well, Memorial Day traditionally marks the start of a slowdown in trading activity, but our next guest says if you sell in May and go away, you may miss opportunities in the options market. Here to explain is Rick Pendergraft. He's options trader and chief investment analyst of Investors Daily. He joins us from West Palm Beach, Florida. We thank him today on this Memorial Day. So, Rick, let me start with what is going on in the market. And will we see that sort of sell in May and go away this year, do you think? Or will it be different given that we've got global money coming into the equity markets here in the U.S., as well as a lot of M&A activity?
Well, I look at it as kind of a good news, bad news situation. I mean, it's good that the S&P is approaching its all-time high. That's good that hopefully investors are seeing their portfolios get back close to all-time highs or higher. The bad news is that we're any overbought, oversold indicator that you look at, we're reaching overbought territory. So that's kind of bad news. And while we're at the same time, the economy is showing that we're slowing down. The GDP numbers for first quarter, we saw a 1.3% growth rate, the worst we've seen in 4 or 5 years. So that's on the bad side. On the good side, the slope of this trend is not nearly as high as what we saw in the 90s. So investors aren't as overzealous as they were back then. The other thing is we're seeing record levels of short interest on the New York Stock Exchange, and that tells us that there's still some pessimism out there, and that can fuel the market higher. So I do think we see a correction here in the next 3 or 4 months, but I don't think it's anything to the degree that we saw back in '98 when we had that series of events with long-term capital management and the Russians defaulting on bonds. I don't think we see a 20% drop like we saw in the summer of '98.
Rick, let me just focus on a couple of things that you said there. First of all, the overbought indications. I mean, we've seen that, though, maybe for the last month or more in terms of the overbought indications, but no pullback in the market just yet. What do you think that's a symptom of, though?
Well, a lot of it's based on this merger activity that we're seeing. There's a lot of merger activity going on, record levels of merger activity. So that continues to propel the market higher. It's like the Wall Street's own version of let's make a deal here. And with that, you're seeing the whole market being lifted. And I don't know that that's necessarily a good thing, because when companies are sitting on a lot of cash and they're choosing to go out and buy and acquire another company rather than grow their business internally or grow it through the natural growth in the economy, it's not necessarily a good sign of what they believe going forward, that the more opportunity lies in acquiring someone than internal growth.
Rick, are we sort of set up for the sell in May and go away scenario sort of after this Memorial Day holiday?
I think so. Like I say, I think that we see maybe a 5 to 10% correction somewhere over the next 3 or 4 months. I think that, like I say, I don't think it's going to be as drastic as we saw in '98, but I do think that we're set up to see a drop here in the next 3 or 4 months, maybe the 5 to 10% range.
What could change that? Anything?
Well, if the economy shows some improvement, I'm keeping a close eye on the leading indicators report. We've seen negative numbers out of that report for the last 6 months, and that's, kind of discouraging because that is a forward-looking report. And as long as that continues to be so dire with flat or negative numbers, that will discourage me from getting any longer in the market. If that number starts improving and the overall economy starts improving, then I think we can move higher.
Now, Rick, we've been talking about this morning valuations, especially on the S&P. And, of course, some people see valuations as, undervalued in their view, with the S&P trading at 18 times earnings. And some people are saying maybe a little bit rich. What camp do you fall in? And could that be some of what is continuing to fuel the market as well?
Well, I do see pockets of opportunity in different sectors. I don't think not all sectors are overbought right now. One of the two of them, actually, the retail holders ETF is looking, it's not overbought, and there's some pessimism towards the sector. The biotech sector, there's a lot of pessimism towards the biotech sector, and it's kind of reaching oversold levels on the daily charts. It's still kind of the mid-range on the weekly charts, but I do see pockets of opportunity. I don't think it's a total bearish market over the next 3 months. I just think you have to pick and choose which sectors you want to be in.
Yeah, we'll talk more about those sectors in a moment. I wanted to focus on another thing you mentioned a lot of people look at, and that is the level of short interest at the New York Stock Exchange. Will that drag the market down, though?
Actually, being contrarian, I look at short interest as a positive sign for a potential for the market to keep rising. That being said, when the sentiment indicators are a gauge of buying pressure. And when you see this money on the sidelines or is short the market, if the market continues to rise, that short interest, those short sellers have to buy back those shares and can increase the buying pressure that's there already. So with that, I find it encouraging that we're seeing that pessimism, and that tends to lead towards a higher move.
Okay, Rick Pendergraft. All right, just ahead on Market Pulse, Iran and the U.S. hold public talks for the first time in nearly 30 years, and that's ahead in world and national news. And it's the unofficial start of the summer. We'll have your Memorial Day weather forecast. Stay with us.